Hello, welcome to Geojit Spotlight. The Fed rate action yesterday was big, a 50 basis point cut. Equally important was the Fed chief Jerome Powell's optimistic commentary that we have gained greater confidence that inflation is moving sustainably towards 2%. Also, the Fed chief said that he doesn't see any significant slowdown in the US economy. 2% GDP growth is likely this year and the next. In spite of the 50 basis point rate cut by the Fed, the market did not respond positively. In fact, the indices closed mildly in the red. There are two reasons for this. One, the rate cut was expected, though there was uncertainty about the percentage of the rate cut. Two, the market is already at record highs. Even though the Fed is optimistic about the US growth, the market expects the global growth to be weak going forward, particularly next year. Europe and China, the other two growth engines of the world, are very weak. China is going from weak to weaker situation. The rate cut by the Fed is likely to facilitate consolidation in the market with an upward bias. Sustained rally would be difficult given the high valuations and the sluggish global growth outlook. Coming to India, the Fed rate cut and possibilities of further rate cuts this year and next will pave the way for increasing FPI inflows into India, even though the high Indian valuations are a concern. Another likely, almost certain scenario is that the possibility of rate cuts by the RBI. Inflation in India is coming under control. During the last 2 months, CPI inflation came below 4%, the RBI's target. This is mainly due to the base effect. CPI inflation will again move above 4% in the coming months. Even then, there are prospects for 2 rate cuts of 25 basis points each before 31st March 2025. This is positive for markets, particularly positive for rate sensitives like financials, particularly banking. FMCG and pharmaceutical sectors also are looking very resilient. Investors should focus on large caps which are safe.